Dear students, I am going to do the second problem on the board, that is journal entries and 18 transactions I am going to explain. So the first transaction is just on it, it's not the continuous transactions, the transactions which I want to explain, which you will not find in the textbooks and all, because some mixture of all the transactions I have explained. I want to give that idea about how we will different items, loss by theft, charity, advertisement, free samples, everything I have included. So 18 transactions. First transaction is amount paid to Mr. Appu 1500, discount allowed by him is rupees 100 and in full settlement of his claim 1600. So here Appu's account debtor, see the date I have changed to January 17th, all the transactions I have given one date. So Appu's account debtor 1500, discount account debtor 100 to, cash account debtor, Appu's account debtor 1600, Appu's account debtor 1600 to cash account 1500 and to discount received account 100. So you can write the narration being cash paid to Mr. Appu in full settlement of his claim. So Appu's account 1600 was the amount due to him. He is allowing 100 rupees discount and cash paid by the firm is 1500. So the next transaction is second transaction. Second transaction is depreciation 5000 charged to furniture. So how you will write? You know that depreciation is an expense. It's a nominal item. So here you will write same date. Depreciation account debtor. Depreciation account debtor. Debtor should be close to the ledger folio column. To furniture. To furniture account. Value is 5000. So this can be any item. This is furniture. Now it can be vehicle, it can be plant, it can be land and machinery, anything. So you will write the narration being depreciation charged to furniture. Next transaction. Next transaction is interest on capital 3000 charged, or they will give another information 60,000 is the capital, charge 5% interest. So that meaning the value is 3000. So how you are going to write the journal entry is interest on capital account debtor to capital account. So interest on capital account debtor to capital account. So 60,000 into 5 by 100, 3000 you will get, or sometimes in the problem directly they will say that 3000 is the interest on capital. So this will be the journal entry, interest on capital. This is an expense, nominal item, and capital account is a personal account. So this is the journal entry. So this next transaction is sales outstanding rupees 1000. So salary is outstanding. So salary is outstanding. If you are writing salary is outstanding 1000, salary account debtor 1000, salary account debtor 1000 to salary outstanding account, salary outstanding account. So this outstanding salary is not paid. Salary is an expense, nominal item. Salary outstanding is a personal account because it represents the person. Next transaction. So that rent outstanding. So salary outstanding you wrote, same thing if you write rent outstanding. Rent account debtor to rent outstanding. So the same journal entry value is the 1000 itself. So this is how you will write rent is an expense, rent outstanding is a personal account. So this next transaction. So income prepaid, insurance prepaid. Insurance prepaid is, see usually insurance, if you are paying in between, in the middle of the month, in the middle of the year. So 1 year they will collect. So 6 months will be always prepaid, meaning paid in advance. So insurance prepaid meaning, so you will write the journal entry as prepaid insurance account debtor, insurance account debtor to insurance account. This will be a journal entry. This is a usual item in the problem. When we are doing the final accounts, this will be a problem. Value is only 500. So 500. Prepaid insurance account debtor to insurance account. Next transaction. So next transaction is amount withdrawn by the proprietor 5,000. I told you amount withdrawn is always drawings. So drawings account debtor to cash account. Drawings account debtor to cash account. Drawings account debtor to cash account. So the value will be 1000. So the value is 1000. So this is how you will write the transaction. Drawings by the proprietor. Drawings account debtor to cash account. Next transaction. Cash withdrawn by the proprietor 500. The same transaction. When cash or goods withdrawn by the proprietor, it's drawings only. So drawings account debtor to, so drawings account, here goods are withdrawn. So drawings account debtor to purchases account. This transaction is important. This you have to remember that this is a different transaction. Goods are withdrawn. Cash is withdrawn. Drawings account debtor to capital account. Cash is going from the capital, whereas goods are withdrawn. We are writing drawings account debtor to purchases account. Why we are writing purchases account? When a person, owner is taking the goods, it's charged at the cost price. We are not taking the selling price. That is why we are writing it as purchases account. Next transaction. Next transaction is goods given as charity worth rupees 1000. So here the transaction is charity. So we can write it as sundry expenses account debtor to purchases account. Sundry expenses account debtor to purchases account. See, these transactions are important. That is why I have included these transactions. This you will come across in when you are doing the final accounts. So here goods given as charity. So sundry expenses only we can write. And since goods we are taking at the cost price, we are not taking at the selling price. So that is why we are writing purchases account. Next transaction. Distribution of goods as free samples worth 1000 to distribution of goods worth 1000 as free samples. So here why we are distributing goods as free samples? It's advertisement account. Advertisement account debtor to purchases account. See, these transactions are important. Again and again I am telling. This you will not see in the textbook and all because these are different adjustments. Advertisement account debtor to purchases account. Value is 1000. So this is very important. Distributed goods as free samples. Why we are distributing? It's for advertisement. Next transaction. Goods distributed among employees worth rupees 1000. So this is employees. Among employees it's distributed. So the journal entry is salaries account debtor to purchases account. To purchases account. Salaries account debtor to purchases account. See, this purchases account is getting repeated because you have to remember that its goods are taken at the cost price. It's not at the selling price. And when you are distributing to the employees, salaries account you have to debit. Next transaction. Loss of goods by theft. This is a common item. Loss by theft account. Loss by theft account debtor to purchases account. This is a usual item. Loss by theft, loss by fire, all this same transaction. Loss by theft account debtor to purchases account. Next transaction. Goods lost by fire, 1000. So here also loss of goods by fire. Loss of goods by fire account debtor. Fire account debtor to purchases account. To purchases account. These transactions are important. Again and again I am telling. This you should remember. Credit value is only purchases because goods we are taking it only at the cost price only we are charging. We are not charging the selling price. So loss of goods by fire account debtor to purchases account. Next transaction. Now paid life insurance premium of the proprietor rupees 500 from the business funds. So this is another type of drawings. So drawings account debtor to cash account. Drawings account debtor to cash account. So you have to remember, proprietor's personal insurance he paid using business funds. So it is drawings. So drawings can be two types, drawings in cash or in goods. So drawings, here it is cash, that is why drawings account debtor to cash account, value is 500. Next transaction. Next transaction is drawings by the proprietor rupees 500 by check for personal use. So this is also another transaction. Here you have to remember, earlier transaction was cash transaction. Now here it is withdrawn by check. So that means drawings account debtor to bank account. Why bank account? Because here it is withdrawal is from bank. So drawings account debtor to bank account. Next transaction. Next transaction is proprietor bought scooter worth rupees 35,000 for personal use. So here also it's the same drawings, another form of drawings. He want to buy a scooter and he is using the business funds. So drawings account debtor, we are not writing scooter account because he is using business funds. Drawings account debtor to cash account. Cash is going from the firm. So drawings account debtor 35,000 to cash account 35,000. Next transaction. Proprietor paid college fees of his son rupees 500 using business funds. Same transaction, drawings account debtor to cash account. Drawings account debtor to cash account 500. So this is another type of drawings. So the last transaction. Next is goods purchased for rupees 5,000 and paid by check. So here you have to remember, it's not cash payment. When you are buying goods, you are getting purchases. So purchases account debtor to bank account. Purchases account debtor to bank account 5,000. Purchases account debtor to bank account 5,000. So these are the important transactions. So what all transactions you have to emphasize, I have explained in the board. So it's like just recreated the classroom. So the different transactions I have explained. Please remember that where you have to use purchases and drawings by cash or drawings by goods, all these are important. So this is what I want to explain with journal, and many problems I am going to work out and I am going to give it in the description box. So please do the problems and give me a valuable suggestions, feedback, subscribe to the channel, and happy learning with Dr. Alice Mani. Thank you.